95% of traders lose money, not once in a while, consistently, predictably, almost mathematically. They study for years. They consume every trading book, every YouTube video, every course. They practice on demo accounts, they backtest strategies, they join communities, they pay for mentors, and still they lose. Meanwhile, 5% stack wins month after month, year after year. Same charts, same brokers, same market conditions, same 86,400 seconds in a day. What's the difference? It's not IQ. I've watched Ivy League graduates drain 6 figures from their accounts, while a high school dropout banks consistent profits. It's not money. You can blow $100,000 just as easily as $1,000. The percentage stays brutal either way. It's not information access. We're all staring at the same data, the same price action, the same news feeds. The difference is this. The 95% treat trading like a battle to win. The 5% treat it like a system to execute. Today, I'm going to show you the exact psychological traps that make trading feel impossible, the invisible mistakes that drain your account while you're convinced you're doing everything right, and the counterintuitive mindset shifts that separate consistent losers from consistent winners. By the end, you'll understand why trading has felt like pushing water uphill. More importantly, you'll know exactly what needs to change. Let me tell you about Marcus. Marcus was a doctor. Emergency medicine. Life and death decisions under pressure, split-second judgment calls, pattern recognition honed over 15 years. If anyone should succeed at trading, it was Marcus. He approached the markets the way he approached medicine. Study the symptoms. Diagnose the condition. Prescribe the treatment. Execute with precision. His trading desk looked like a war room. 6 monitors. Real-time scanners. Heat maps. Level 2 data. Option flow. Sector rotation indicators, correlation matrices between 17 different instruments. Every trade was backed by a 12-point checklist. Every entry had supporting confluence from at least 5 different technical factors. Every position was sized using a complex algorithm that accounted for volatility, correlation, and portfolio heat. After 3 years, Marcus had lost $180,000, not from being reckless, from being too careful. From turning trading into such a complex operation that he couldn't execute without second-guessing himself into paralysis. Now meet Jake. Jake delivered pizzas, no college, no financial background, just a guy who liked video games and noticed that trading felt a lot like playing poker. You don't win every hand. You don't need to. You just need an edge, and the discipline to play it correctly over thousands of hands. Fold more than you play. Bet big when the odds favor you. Never go on tilt. Jake's trading system fit on an index card. One setup, one time frame, one market. Entry rule, priced as X, I buy. Exit rule, price reaches Y, I sell. Price reaches Z, I sell. Risk rule, never more than 2% of account on any trade. That's it. 3 sentences. An 8-year-old could understand it. After 3 years, Jake's $5,000 account had grown to $47,000. Not because he was smarter than Marcus, because he made trading so simple that emotions couldn't interfere with execution. This is the pattern that repeats endlessly. The intelligent, the educated, the analytical, they complicate trading into impossibility. The intuitive, the simple, the systematic, they reduce it to obvious. But why? Why does intelligence work against you in trading? Why does more knowledge often lead to worse results? Here's the uncomfortable truth. Everything that makes you successful in normal life actively destroys you in trading. In school, more effort equals better grades. In trading, more effort often equals overtrading and losses. In careers, more hours equals more productivity. In trading, more screen time equals more opportunities to make mistakes. In problem solving, more data equals better decisions. In trading, more data equals analysis paralysis and missed opportunities. Trading breaks every mental model you've built about how success works. And your brain cannot handle this contradiction. Let me show you the 5 psychological traps that make trading impossible for 95% of people. If you're struggling, I guarantee you're caught in at least 3 of them right now. Trap 1. The control illusion. In every other domain of your life, control equals results. You control your diet, you control your weight, you control your study habits, you control your grades, you control your work quality, you control your career trajectory. Cause and effect, input and output. Predictable, logical, fair. Trading obliterates this model. You can do everything perfectly and lose. You can do everything perfectly and lose. You can do everything wrong and win. The market doesn't care about your analysis. It doesn't reward effort. It doesn't recognize your expertise. Your brain finds this intolerable, so it creates the illusion of control. You add more indicators, believing that if you just analyze hard enough, you can predict what happens next. You study price action for hours, convincing yourself that you can see what others miss. You watch every tick as if your attention somehow influences the outcome. This is your brain lying to you, making you feel like you have control when you have none. The 95% fight against this reality. They spend years trying to create certainty through better analysis, more sophisticated systems, deeper understanding of market structure. It never works. You cannot control the market. The 5% accept this completely. They don't try to control outcomes. They only control the response to price action. They don't predict. They react. They don't need to be right. They need to execute their edge. Marcus couldn't let go of control. Every trade was a referendum on his ability to predict and analyze. Every loss felt like a failure of his system, so he added more variables, more checks, more analysis. The illusion of control grew stronger even as his account shrunk. Jake never tried to control anything. Price went up or down, he responded according to his rules. Win or lose, he executed the process and moved on. No illusion, no attachment, just execution. Trap 2. The meaning addiction. Your brain is a pattern recognition machine evolved to find meaning in everything. That sound in the bushes, probably a predator. That person's facial expression, they're upset with you. That sequence of events, cause and effect. This saved your ancestors from being eaten. But it destroys you in trading. Because here's what your brain cannot accept. Most price action is random noise. Most moves have no meaning. Most patterns are coincidences that will never repeat. But your brain sees a chart and cannot help itself. It finds patterns. It creates narratives. It assigns meaning to randomness. This looks like a double bottom, which usually leads to a rally. The last 3 times this indicator flashed, price went up. This is clearly institutional accumulation before a breakout. Maybe. Or maybe it's random price fluctuation that means absolutely nothing. You cannot tell the difference. And this is the trap. You find a pattern that worked 3 times. Your brain screams, "This is it! This is the edge!" So you take the trade with full conviction. It fails. Your brain immediately creates a new narrative. The pattern needs this additional filter to work. You're not finding edges. You're finding random sequences and random noise and convincing yourself they mean something. This is why most traders endlessly cycle through strategies. Every system seems to work for a while, then stops. It never worked. You just witnessed random clustering and mistook it for an edge. The 95% are addicted to finding meaning. They see faces in clouds and call them setups. They pattern match on tiny sample sizes. They believe every price move has a reason, a cause, a prediction embedded in it. The 5% understand that most price action is noise. They don't try to predict why. They don't care why. They have a statistical edge tested over thousands of occurrences. They execute it without needing to understand the meaning of each individual trade. They've killed the addiction to narrative. They've accepted randomness. Trap 3. The punishment response. Every time you take a loss, your brain registers it the same way it registers physical pain. Literally, the same neural pathways light up. Your brain evolved to avoid pain. Touch fire, feel pain. Never touch fire again. Simple, effective, survival enhancing. But in trading, this response kills you, because losses are not errors to be avoided. They're the cost of doing business. Every trading edge loses sometimes. The best systems in the world might win only 45% of the time and still be massively profitable. But your brain doesn't understand this. Every loss triggers the pain response. Every loss triggers the pain response. Every loss screams, "Stop doing this thing that hurts you." So what do? You modify your system after a losing streak. You skip the next trade because you're gun shy. You take smaller size because you're afraid. You exit winners too early because you can't stand the thought of a win turning into a loss. All of these responses feel protective. They feel like you're learning, adapting, being smart. You're not. You're letting your pain avoidance system override your trading edge. Marcus did this constantly. 3 losses in a row, he'd modify his entry criteria. 5 losses, he'd reduce his size. A month of drawdown, he'd completely change his approach. He was running from pain, and every time he ran, he abandoned his edge before it could work. Jake felt the pain too. Losses sucked. But he understood something crucial. His edge played out over 100 trades, not 3. A losing streak wasn't a signal to change. There was noise within expected variance. He kept executing. He didn't modify after losses. He didn't run from pain. He accepted it as part of the process. The 95% treat losses as mistakes to avoid. The 5% treat losses as expenses to accept. Trap 4. The recency bias. Your brain heavily weights recent information over statistical reality. Someone gets attacked by a shark, beach is empty for weeks, even though you're more likely to die driving to the beach than swimming in the ocean. You see a green candle, you feel bullish even if the longer-term trend is clearly down. In trading, recency bias kills you constantly. Your system just had 5 winners in a row, you feel invincible. You increase size, you get loose with your rules. Then you give it all back on the next 2 losers. Your system just had 5 losers in a row. You feel defeated. You skip the next trade, which turns out to be a massive winner, or you abandon the system entirely right before it enters a winning streak. Your brain cannot see the forest for the trees. It cannot hold statistical reality in mind when recent results are screaming at you. The 95% are slaves to recency. They're always making decisions based on the last few trades, not the last 500. The 5% track their systems over massive sample sizes. They know their longest losing streak. They know their average drawdown. They know the statistical distribution of their results. Recent results don't shake them because they're operating from data, not feelings. Marcus would go weeks tracking a new system flawlessly. Then one bad day would shake his confidence. He'd second guess, he'd modify, he'd abandon. Always reacting to recent pain instead of statistical reality. Jake had a spreadsheet, every trade, every outcome. He knew his system went through 8 trade losing streaks sometimes. When it happened, he didn't panic. It was expected variance. Trap 5, the ego protection. Here's the most painful trap of all. Your identity cannot handle being wrong all the time. You're smart. You're educated. You're successful in other areas. You solve problems, you make good decisions, and then you come to trading and you're wrong. A lot. Even good traders are wrong 40% to 60% of the time. Your brain cannot accept this without feeling like a failure, so it protects your ego. How? You blame external factors. The algorithms got me. That news came out of nowhere. Market makers targeted my stop. You redefine what right means. I was right about the direction, just wrong about the timing. My analysis was correct, the market was just irrational. You avoid admitting mistakes. You hold losers, hoping they'll come back so you can be right. You exit winners too early to lock in being right. All of this is ego protection, and it destroys your edge. Because you cannot improve what you don't acknowledge. You cannot fix mistakes you're blaming on others. You cannot develop discipline when you're redefining the rules to avoid feeling wrong. The 95% need to be right. They need trading to validate their intelligence, their analysis, their decisions. When it doesn't, they create narratives that protect their self-image while destroying their account. The 5% have detached their identity from being right. They're not right or wrong. They're executing a statistical edge. Sometimes it works, sometimes it doesn't. Neither outcome says anything about their intelligence or worth. They can be wrong 60% of the time and feel zero ego damage because being wrong is part of the system. Marcus struggled with this more than anything. Losses felt personal. Every stopped-out trade was a hit to his identity as someone who makes good decisions. He couldn't just accept being wrong. He had to understand why, fix it, prevent it from happening again. His ego wouldn't let him execute a simple system that was wrong frequently. He needed to be right more often, so he kept adding filters and complexity to avoid the pain of being wrong. Jake didn't tie his worth to being right. He was right 38% of the time. Didn't matter. His wins were bigger than his losses. That's all that mattered. So here we are. 5 psychological traps that make trading impossible. The control illusion, trying to predict instead of react. The meaning addiction, seeing patterns in randomness. The punishment response, avoiding losses instead of accepting them. The recency bias, reacting to recent results instead of statistical reality. The ego protection, needing to be right instead of needing to execute. If you're struggling in trading, you're caught in at least 3 of these, probably all 5. The question is, how do you escape? The transformation from impossible to obvious. The shift isn't about learning more. It's about unlearning what your brain thinks it knows about success. Shift 1. From prediction to execution. Stop trying to know what happens next. You can't. You don't need to. Your only job, execute your edge when your setup appears. Price does X, you do Y. Every single time. No hesitation. No second guessing. No analysis paralysis. The professionals don't say this will go up. They say, my edge appears, I take the trade, I manage it according to my rules, I accept whatever happens. When you stop trying to predict, trading gets easier instantly. You're no longer wasting energy on the impossible. You're just executing the possible. Shift 2. From meaning to mathematics. Stop looking for reasons. Stop creating narratives. Stop believing every price pattern tells you something. Start thinking in probabilities. Over 1,000 trades, my edge wins 45% of the time with a 2 first and 1 reward risk ratio. That's profitable mathematics. That's all I need to know. Individual trades mean nothing. They're coin flips with a slight statistical bias in your favor. Some you'll win, some you'll lose. The meaning is in the aggregate, never in the individual. When you stop needing every trade to make sense, you stop trying to optimize randomness, you just execute the system. Shift 3 from pain avoidance to cost acceptance. Losses are not mistakes. They're the cost of having an edge. Retailers pay rent. Manufacturers pay for materials. Traders pay in losses. It's not failure. It's a business expense. When you reframe losses this way, they lose their emotional sting. You're not being hurt. You're paying the required cost to harvest the statistical edge. Track your losses as a percentage of your wins. If you're risking 1% to make 2% and you win 50% of the time, every loss is generating future profit. You're literally investing in your edge. Shift 4 from recency to statistics. Your last 5 trades don't matter. Your last 500 trades matter. Your last 500 trades matter. Keep a detailed performance journal, not feelings, numbers, win rate, average win, average loss, longest winning streak, longest losing streak, maximum drawdown. When you have this data, recent results stop controlling you. You know what's normal. You know what's you know what's concerning. 5 losses in a row? Check your data. If your longest losing streak is 12, you're not even close to concerning yet. Keep executing. Statistics beat emotion. Every time. Shift 5 from ego to process. Detach your identity from outcomes. You're not a winner when you win or a loser when you lose. You're a system executor. That's your identity. Did you follow your rules today? Yes? Successful day. Regardless of profit or loss, did you violate your rules, no matter how much you made? Failed day. Fix it. When your self-worth is tied to process execution, not outcomes, you become unshakable. The market can't hurt your ego anymore. It can only test your discipline. The boring truth about the 5%. Here's what nobody tells you. Trading done right is boring. Absolutely, mind-numbingly boring. You wait. You watch. Your setup appears maybe once a day, sometimes once a week. You take it. You manage it. You exit. You wait again. Hours of nothing. Moments of focused execution. Repeat. No drama. No excitement. No adrenaline rush. The 95% can't handle this. They need action. They need stimulation. They need stimulation. They need the thrill of being in the market. So they trade too much. They force setups. They create action where none exists. The 5% have made peace with boredom. They understand boredom is the price of consistency. Consistency is the price of profitability. If you're finding trading exciting, you're doing it wrong. If it feels like a roller coaster, you're trading emotionally. If every day is intense, you're probably overtrading. The path to obvious: make trading boring. Marcus never made this shift. Trading was too boring when simplified. It felt like he wasn't using his intelligence. It felt like he was wasting his potential. So he kept it complex, kept it engaging, kept it intellectually stimulating, and kept losing money. He eventually quit. Blamed high-frequency traders. Blamed market manipulation. Never looked at the real problem. He couldn't accept that successful trading is simple and boring. Jake is still trading, still executing his 3-sentence system, still waiting patiently for a setup, still bored most of the day. He doesn't talk about trading much. It's just what he does. Like brushing his teeth. Routine, boring, profitable. When someone asks him about the market, he usually says, "I don't know, haven't seen my setup today." That's the sign you've made it. When trading becomes so mechanical that you have nothing interesting to say about it. When the drama stops. When the complexity disappears. When the predictions end. When you stop fighting and start flowing. That's when impossible becomes obvious. The choice. You're at a crossroads right now. You can keep doing what the 95% do. Adding indicators. Consuming information. Trading frequently. Making it complex. Fighting the market. Trying to predict. Needing to be right. Or you can do what the 5% do. Simplify ruthlessly. Execute mechanically. Accept uncertainty. Trade less. Wait more. Measure process, not outcomes. The market doesn't care which path you choose. It will keep moving regardless. The question is, will you still have capital left when you finally figure this out? Or will you be another statistic in the 95% who found it impossible? The difference between impossible and obvious isn't intelligence. It's not education. It's not capital. It's not luck. It's simply whether you can accept trading for what it actually is. A probability-based exercise in self-discipline, where success comes from executing a simple edge repeatedly without emotion. Stop fighting. Start executing. Kill the complexity. Kill the need to predict. Kill the attachment to outcomes. Kill the need to be right. What's left is obvious, boring, mechanical, profitable. That's the 5%. That's the choice. What will you choose?